How's your day been?
Flat out busy. I've literally just got back in about 30 minutes ago. I just had lunch.
Oh, that sort of
Had
day.
half an hour before I could have some lunch before I jump into this meeting.
Yeah, okay. So
Um,
is that a good busy or sometimes?
no, it's good busy. I'm just doing too many of the things that I need other people to do,
Yeah,
just because that's how things are rolling at the moment. So just because I don't have anyone else to do it right now.
yeah, cool. And how did
So
you
things to work on.
yeah, indeed. But it's building, isn't it? You got those 2 good months back to back now and another one to come by the looks of it.
Yeah, I'm pretty determined to make sure we get another one, another good one.
Yeah, nice.
Based
Awesome.
on man the size of the team, including some new subbies that we're doing now.
Yeah.
Um, we're doing a forecast. So what we're doing across the couple of subbies, we're just because we don't know how it's going to work. We're adding an additional FTE to work out like how many days can be worked in a month, how many workable man days in a month based on the size of the team.
Yeah.
And based on that, um, doing a like an end of month forecast based on available man days, size of the team, and all of that. Um, those numbers equate to, and the jobs that are already booked into the schedule and what they add up to. Um, we're looking at a 170 month at the moment.
Yeah, okay. So
Whether we hit that or not, I don't know, but
yeah,
that's our best case scenario. That is basically it is possible based on
yeah.
how many man days there are and
Okay.
and all of that. I don't know if it's the best way to work it. We may a lot of the forecasts, we usually we're plus or minus 20 grand.
Yeah, yeah, good. A rule of thumb I've found pretty common that works across most trades is 25,000 per month per
Mm.
field worker.
Yeah,
So four people in the
that,
field, 100 grand, another two people,
that's a
150.
target. Yeah, that's what we
Um,
try and make happen.
yeah, yeah, yeah,
We're just looking at even if we don't, if we, things get in the way of our targets based on how many man days, because some months are pretty man day light because of public holidays or,
yeah, yeah. Like April.
yeah, right. And we just look at, well, that should be um, our worst case scenario, right?
Mm,
And then a 25 grand per person should be a target, hopefully to hit that, right?
mm.
But, because some of those man days are pretty good. Some of those man days we don't, we might complete a job, but we haven't made any money on it.
Yeah, yeah, yeah. All right.
So,
We'll swing into it. Before I start, just a question
mm,
regards timing, because I'm still working out what the best timing is going to be for you and everyone else
yeah,
for do these sessions.
yeah.
Um, there's, do you think the morning's better, like 8 o'clock, or do you think the
No,
afternoon's better?
not for me. No.
Nah, you want to get this. This was my theory. You want to get everything done, and then
Yeah, in the morning, it's especially at 8, a lot of our guys start working on site. And
yeah,
between, from 8 and 8:30, I get phone calls
yeah,
of
yeah,
like, key safe code's not working, access or there's additionals not on the scope.
yeah,
It's really hard for me to be focused in a
yeah.
meeting at that
No,
time.
no, yeah, yeah, cool.
Um, and I've had a talk to Jody. Jody and I are going to have this isn't a meeting, this is really a um, additional to that weekly meeting rhythm that we were discussing last time that I had a chat to her about that we're going to start, working on.
Yeah,
Tuesdays at 1 o'clock. Um, I'm not even calling it a meeting. We're putting time aside. These are tasks, set a time to work on our task for improving our workflows and
Oh, good.
optimizing
Yeah.
service, mate.
Yeah.
You know, because you're getting to the end of the week and I'm hearing about Jody's frustrations and I'm like, okay, but you know, unless we actively make it better, it's not
Yeah.
going to
Yeah.
get better.
Yes.
Not putting the time aside to actually spend on improving it, right?
Yeah.
So
Yeah.
Monday, 1 o'clock. So my not Monday, Tuesday. So my whole Tuesdays are blacked out. I'm not going to any sites for anything on Tuesdays.
Yeah.
Tuesdays is my full admin day, and then from 1 o'clock I'll spend an hour with Jody walking through that, and then it gives me a little bit of a break, and I'll have whatever, and then I'll jump into the meeting
Yeah. Yeah. Okay. That
at
makes
three
sense.
thirty. So,
Yeah. Cool.
uh, you know, I think that's what I've planned to make it all work. So the afternoon at 3:30 on Tuesdays, I think would be good for me. Is
Yeah.
it?
Yeah.
Are
Yeah,
they
cool.
struggling? Are they?
Yeah. Yeah. Uh, but I just got to lock it down at some point. You're not going to get the right time. I think the afternoon is the best because, like you said, most people have got stuff going on in the field in the morning they want to get done.
Mm.
So
Yeah, that's when you know that's where all your solution finding
yeah, yeah,
needs to be happening.
yeah. But well, let's hook in the what I there's two important things this week and next week. We come up to the end of like the 6 week mark where we're going to
Yeah.
do the next plan. So next week we're going to spend a bit of time doing an audit again, and you've got a few things in place since we've started. So it's kind of a reset of
Mm.
where the business is and what's the next right thing to work on.
Yeah.
This module is taking control of your finances, and it's something that is super important. You know, every business has got to have you got to know the numbers, got to know
Mm.
your gross profit, got to have your dashboard working, and then you can actually manage the business. But you don't have to do it. So the idea of this is the framework. You can take this, you'll get a copy of the recording too, and it might be something you want to give to Mel to have a look at too.
Mm.
So this is the philosophy. Can we make this work for my business or
Yeah.
your business? Right.
Yeah.
So that's the idea here. So I will share my screen, hook into it. Oh, firstly, I'll send you the sorry,
I've been meaning to watch that video prior to the meeting that you sent through on Sunday, and I just haven't been able to.
oh, no worries. That was just a quickie saying um look, I'll send you all the stuff we look at. I'll send you all these notes and everything
Yeah. Okay. Right.
as soon as we're finished.
Yeah.
Um, let me just share my screen.
Have you spoken to Tyler recently?
No, no, he is not since you and I spoke
Oh, okay. Just
about going because I'm going to
yeah,
ask
see if I
that
can
one.
get his
Yeah,
service mate guy's number.
yeah, 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 yeah. I'll definitely
I've
ask him.
been ringing a few other partners and I haven't found anyone that I thought was suitable. They're all, you know, the kind of helping people start up, you know, from scratch.
Yeah. All right. So financial control. The main reasons we're doing this are probably pretty obvious, but we'll just kind of run through them. You want to get clarity. If you got clarity in the numbers, then your anxiety goes down.
Yeah,
So if you know where you're at from a cash, from a profit point of view, you're going to be more relaxed. You're going to be confident in making decisions. Uh, so you know with the forecasts and the budgets and the like, you can when you put people on, or when you need to put people off, you can make those decisions in confidence.
yeah,
Get some time back. So if you've got a system to run the finance, it's going to free up time for you.
yeah.
So you don't have to do it. It's super important, but it's not super important that you do it. And the other important thing is that you'll build trust with your team if you're all over the numbers and you know where they're at and you can make those decisions. If you've got any lenders or accountants you're working with too, you if you can put your fingers on those numbers, it really gives confidence in the business.
Not only that, I think it's too that once this sort of becomes familiar at the moment, I've got a lot to learn and it's just bit by bit, right? Especially with your financial advisors or your accountants or whatever,
Mm.
you're able to start talking the same language,
Yes. Yeah.
right?
Yeah. And I will just on that, there's one thing that bugs me about accountants is the language, and that sometimes they hide behind the language. And so,
Mm.
and if they can't explain something to you and it doesn't make sense, you got to ask the next question. Don't assume it's because they're
Yeah.
smarter or anything. You got to unpack.
Sometimes, yeah, I've learnt this the hard way. I think I've had it before. It was put in a way where I just thought I didn't have the intellect to understand it, but then I realised they didn't know what they were talking about, and they just tried to sound smart because they were
Yeah. Yeah.
covering for incompetence, right?
It's so common. So common. You're 100% right.
Yeah,
Uh,
I learnt this the hard way, Peter.
yeah. 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 I think we all have.
Mm.
So look, some mistakes to avoid, to look out for. One of them is relying on your bookkeeper or your accountant um, to make the management decisions. So you want the numbers, but you can't have them they're not making the management decisions for you.
Mm.
So we've got to be furnished with the right data so you can make the decisions. Another mistake is only looking at finances once a month or once a quarter. Um, and some people will look at their P&L once a month. Some don't even look at it till the end of the year.
Mm.
Um, and really, we want to get in a position or where you got daily numbers. That's why we set up that dashboard of knowing what the revenue was. You
Mm.
don't have to look at every number daily. Um, Another thing is not tracking lead indicators.
Mm.
So a lot of financial data is a lag indicator. It tells a story of what happened already.
Yeah.
Um, so when we're looking at the finance system, I include in there numbers that come from the operational side. So it's data, but it's not necessarily just out of Xero or
Mm.
QuickBooks or whatever you're using.
Yeah.
Um, Now, the another common mistake is people run the business on the bank on what's in the bank,
Yeah.
but that doesn't help you plan, and you can if you're not aware of all the liabilities, you can get into trouble. Kills the cash flow, and it's probably mixing. This is not everyone, but smaller businesses is mixing business and personal expenses.
Mm.
Always a trap. There's really no way to avoid tax. You can kick tax down the road, but you're going to pay it in some way. So it's super important to just have it clean so you know where everything's at. Um, and then there's on the there's whoops, another thing we'll talk about is the five cash traps, and one of them is well I'll go through them more in a bit more detail. But one of them is not invoicing quickly enough.
Yeah.
You're so having your work in progress tied up. So sometimes just not having visibility of that's not on your P&L necessarily in the when you're accounting on an accrual basis, but that's a number that'll come out of ServiceMate or Simpro
Mm.
or whatever job management system you got.
Mhm.
So that's why it's important. There's three key steps we're going to cover off: building the financial system, creating the dashboard, and tracking the right numbers. And understand. I'm going to get a little bit nitty gritty. So I'm going to show you some things in Xero that you'll be able to use too. That'll make things a bit easier.
Mhm.
Okay, so the building the finance system. This um, this guide I'll send you too. So this I might have sent you this already, but basically you can give this to
I don't know if you
Jody.
sent me this. I don't know if you sent me this one.
Yeah, okay. So it's just got the three steps we need to do. We've got to collect everything, we've got to process it, and we've got to report it. And we're reporting on a tax basis and also a management basis, and they're not always the same thing. So what you want, the data you want to manage the business, not necessarily the same as what an accountant or bookkeeper will do from a tax point of view. So in here, this is those steps again: collect, process, and report. So the collecting is just getting everything in. Um, we've got ServiceMate here as well. and zero for you to get the data out.
Mm-hmm.
There's a lot of automation that can be done on that. There's a lot of there's easy ways and hard ways to do it. You can email stuff directly into the systems, be it Zero or you've got automatic. Well, you're looking at some of the automatic loading for jobs in the service, mate.
Well, I know with ServiceMate that when a job's completed and the status of the job is changed to complete, it automatically generates an invoice, which then sits
Yep.
in ServiceMate.
Yep.
And then you go in and you approve it. Once you approve, it's approved. That will send it through to Zero.
Yep. Yep.
So it's pretty quick.
Yep. Yeah. Perfect.
So then it'll show you for the week, all the jobs that are completed and the status about whether they've been approved, sent to Zero or not. And you just click on
Yep.
them, send them all through.
Yeah. Cool. So one of the easiest way people set up this collection process is they get an email that's accounts
Yeah, we've got that.
at your domain.
So all that email, all that address is for payable receivable. That's it.
Yeah, great.
There's no communications really, and not supposed to be. So supplier invoices, purchases, and subby invoices
Yeah,
only go to accounts. Everything else, all communications regarding jobs go to admin. So if they send their invoice through to admin, they've sent it the wrong place. It doesn't get
yeah,
processed.
yeah. Okay, cool. So and then you've got the reporting. As I mentioned, there's the reporting that's going to be useful for running the business, manage the business, and there's reporting that's your compliance stuff for the ATO and your BAS and IAS and payroll and all that sort of stuff.
Mm.
And we're going to have a look at what these dashboards can look like that make them useful. And this is where it gets valuable. And what I suggest the best practice here is you as a business owner are focused on this part and the compliance, of course, but the rest of it, or here, is done by the team.
Mm-hmm.
And there's two roles in that, and I'll just touch on those roles quickly. Where are we? Yeah, these two roles. You got a finance assistant and a bookkeeper, and they're a little bit different. So on the finance assistant side, and sometimes this one person's doing the same job, or as a big business gets bigger, it gets separated. But there's a lot of admin tasks that can happen in the business that don't need to have bookkeeping qualification.
Mm.
Where I see some businesses get into trouble is when they go over and they're doing the bookkeeping themselves, or they got someone who's experienced but not qualified, and they can make mistakes in there. Whether it's not paying enough tax or paying too much tax, not allocating GST correctly, not
Mm.
setting up loan accounts correctly can be really problematic.
Mm.
Bad bookkeeping can cost you way more than what good bookkeeping costs. So making mistakes in that it can be very expensive. So yeah, those two roles are a bit different, and most businesses, it's good to have someone who on this side of it, the finance side, that's also able to do other admin side. They might be involved in, sending out the invoices, or doing inductions, or getting access to places. The other sort of to job sites, and like the other ordering materials. Those sort of assistant type roles there. So there might be for you, there might be a separation here between Jody and Mel and the tasks they're doing.
Mm.
So that's the system. We've got to collect, process, report, and then we get to the dashboards, and we've got those data, the data. The one thing I want you to do is have a look at the dashboards. We'll go through some of these KPIs, but set up a dashboard for your business, and we can have a go at what some of these things will look like. And I might go straight to those numbers, but before I do, I just want to show you in Xero so you can see um, where you can go to pull these reports out of. Okay, this is not your business. This is just a demo company that Xero's got.
Hmm.
And after we because I've got this recording because I want people to be able to catch up. I won't do your business, but when we stop recording, we can jump into yours and I'll show you how we set up for yours. So one of the things here is we want to put this onto the front page, and I'll show you where that is. The current ratio is how liquid the business is. Do you have enough money to meet your payments or what your liabilities? Gross profit, as we know, super important, and net profit super important too. And this is still ridiculously high for the sort of businesses we look at, but it gives you the trend. The next thing down here, you've got the cash in, cash out, which is good. Then you've got the invoices owed to you that you've got to collect. So on the front page, you can tell a lot straight away.
Hmm.
And then if you go to accounting reports and you go down to the business performance, that's where you can get those graphs on the front page by putting a star in them. So I'm just going to star a few others here.
Oh, you can add more.
Yep, they're not all particularly useful, but if you put a star on there and you go back, they'll appear on the dashboard. So there we go. We've got all those indicators, and they're just standard um, uh, frames or tool widgets, I guess, that Xero run. But current liabilities, net worth, not debt ratio, these things aren't necessarily gross profit, net profit, and the current ratio, which is a
Mhm.
cash indicator, are really useful. So I would suggest that for any trade business, that we're going to the business performance page here,
Mhm.
and we turn off those other ones, but we leave on current ratio,
Mhm.
we leave on gross profit, and we leave on net profit.
Mhm.
And the important thing here is the trends. So net profit and gross profit, very clear. Current ratio, just to explain that, it's current assets over current liabilities. So if in this case, it's 0.4, which means this business only has 40 cents for every dollar it owes. So you're looking for, I guess, par is one where you've got $1 for every dollar you owe in the current liability. So if you had to pay everything out, you could today. And current
Mhm.
assets include your cash and also your receivables.
Mhm.
And your current liabilities generally are your debtors, your suppliers and the like, and superannuation and payroll and the things you got to pay
Yeah,
out
yeah,
straight
yeah,
away.
yeah.
So when you look at the dashboard, you can easily get a trend. This is not a great example, but you can look there on the right. If it's going down, you go alarm bell, I need to dig in. If it's
Mhm.
going up, you go, okay, I'm building cash. That's good.
Mm.
And gross profit and net profit are pretty straightforward there too. So they're um, are good indicators. The other thing I wanted to show you here is that you can pull this out at any time. Is if you go to reports and get the executive summary. Uh, we're going to pull the executive summary out. It's a mixture of profit and loss and balance sheet items that can be really useful. So I'm going to do this for last month, and I'm going to compare with the last 6 months as a standard. And it's going to pull those numbers out. Now, this can still look a little bit like hieroglyphics or a whole lot of gobbledygook. I'm going to export that to a PDF. What I've done is built a GPT, which I'll
Mhm.
give you a link to, that is for analyzing this and giving you the feedback in plain language. So what we do is we upload that executive summary and stick it in. it's going to ask a couple of questions, which will be, and we'll do this for your business shortly. So it's going to want to know your monthly revenue target, your target gross profit, your target net profit. And I can't remember what what makes sense for that business. But let's just give it some answers. And then it's going to give us and with some rules that I put in here, a bit of an analysis of where the business is compared to what you're trying to achieve.
The figures that you put in with what your targets, what you're trying to get to, right?
Yeah.
Compares that against where you're actually at. Right?
Yeah. Yeah.
Okay.
Yeah. So we've said here in this case, our target revenue is 45, and it's saying, well, your revenue is very low. You missed it by 17 grand. Your gross margin is very high. When that's over, and it's not a great number in this example, but it just compares the results to yours, and then we'll go on and give a bit of a summary and some recommendations. Now, the beauty of this is that it's putting it in a just plain language that's simple and easy to understand. So with the link to that, you can put any of your financial reports into this GPT, and it will give you, without, just in bullet points, a summary of what's going on.
Yeah, great.
So we'll run this for your business shortly too, but that's a tool I wanted to point out for you.
That's great.
Normally it runs a bit quicker than this, it goes, spits it out. But it's saying, right, we've got to increase revenue, cost control, direct costs, overhead expenses. These are effectively very high. Cash flow management. We're currently averaging 25 days to collect cash in this scenario. Okay, the other tool that's in here is this this financial dashboard. So we've got a version of this we set up for you, and it comes back to some of these KPIs: revenue, gross profit, labor utilization, jobs completed, jobs not invoiced, cash position, debtor days, age receivable. Sometimes too much can be too much, like less is more. So I've put a lot of things in here that may or may not be useful for you, but you can take some out or you can add some others in. But this is the sort of thing you could give to Mel and say, Mel, can you produce this for me every week? And we just go down the page week by week, and then you can see is gross profit going up or down? That's in dollars. So we'd probably want to put in here GP and percentage as well, so we can watch that. Dollars is still really useful for gross profit because you can't bank percentages. That's how much you got to run the business. Labor utilization, really important. You want to see if that's going up or down. And that would be a number you'd get out of ServiceMate rather than Xero.
Labor utilization, what key things that generate that? So
generally you pay, take a normal day, you're paying the guys 8 hours, but they might have only got onto site to do 6 hours of work because they had
it's actual productive time, your productive percentage.
Yes. Yeah.
So on an 8 hour day, usually a good worker will produce 6 hours worth of productivity, right?
Yeah. So it's not measuring like productivity as such as like how effective they are on site. It's just, were they billable or did that hour go towards the job?
Yeah, they could have been driving the site. They could have been running around doing other things.
There
might have been a few delays, couldn't get access. So
100%.
In that 8 hour block, they weren't able to do 8 hours worth of work.
Yeah, that's right. So keeping an eye on that is really useful because that impacts your cost and utilization and how much you'll be able to
start to see patterns too, right?
Yeah, for sure.
Whether it is legitimate reasons that are preventing or whether, you've got employees that are sandbagging, right?
Yeah, exactly. So if you think if you're going
which we've had in the past.
Yeah.
Right. So it's hard you know, and you know because your gut's telling you, but you don't,
Yeah,
you know, like having something clear to look at too,
yeah. Yeah.
as well. You can't run a business off your gut all the time. You need to be able to see it.
Yeah, spot on. So this one going from 80 to 78 to 82, you go, oh, okay, that's going up. That's probably pretty good in this case, a bit of a dip and then up. But if it went back down to 70, you might, something might twig if it, you wouldn't worry about it that week, or you'd realize that week there was a whole lot of stuff that,
Could have just been a one-off, an anomaly week
yeah.
because everything else is sort of averaging out. Yeah.
Yeah. So if you had a job that the guys are on site for the week, they go there and they can probably get 8 hours billable against that job every day. But if you got 5 jobs during that week and they're moving between the two, you're going to lose some utilization and they're
Yeah.
between jobs, or like you said, site access, getting materials. It'll pick up things we go, oh, I can improve this. Why are they going? And then they're leaving to go to Bunnings to pick up something and then coming back, or they're going to the wholesaler to get something and coming back.
Yeah. Well, sorry, a lot of these jobs, there will be a material run in the middle of the day because we turn up a lot of these jobs blind. So the utes are pretty well set up for most things, but um, but I do know sometimes I'm thinking it shouldn't have taken that long.
Yeah, yeah,
Where there's inefficiencies? Are they taking their time, or they're not writing lists and getting back to site and they've forgot things and they've got to leave again?
yeah,
You know, all I know is that at the end of the day, some of these jobs where I believe they should be at wasn't achieved, and I'm struggling to get clear answers as to what prevented them.
sure, yeah. Okay, so the other things I've got on here is jobs completed. Just if that makes sense to you, the number of jobs for some people.
Yeah, I mean that's going in the scorecard too.
Yeah. Yes, yeah, it is the one you've got.
Mm. Yeah,
Jobs not invoiced. So how many jobs are sitting there that we've finished but not invoiced?
started. Yeah,
Cash, so you can see that the trends on that. Debtor days, which zero will give you. It's very easy to work out. And if that's going down, that means we're getting paid quicker. And the amount of money that's owed to us. Payables is how quickly we pay our suppliers,
yeah,
how much we owe. And I put in here too tax and super liability, so we can just keep a track on that on a weekly basis, trying to avoid that surprises.
yeah.
Profit, super important that we're doing that, and what our break even revenue is. So just on our calculation on that
Mm.
as we go. And then this one's got a cash buffer. So how many weeks have we got cash that we're going to
Mm.
be able to operate? So that's a pretty simple scorecard. There's nothing fancy about this. It's got to plug the numbers in, but you can give it to someone who can get access to this and plug them each week so you can have a look. And just running down the page, you start to see the trends. Doing it week on, week out, you start to understand what's normal and what's not, and then you can start to look for improvements.
Mm.
And then you might, one thing I challenge you to do on this too is as you're looking at this once a week, go, what do I want to know daily? And I think this is where we got to with you is just looking at the revenue that we're booking each day. So each day we can see we're moving up rather than waiting for the week
Mm.
before we look at it. So that is our dashboard. Now let's just think about, I wouldn't mind doing before we jump onto yours live, let's have a look at um, what numbers are going to be most impactful for your business. So here's a bunch of them that we looked at in that example. Uh, but if what do you think? What should be on your dashboard? We've got what's on the current one at the moment. There's definitely revenue, isn't there?
On the zero dashboard.
No, no, on that spreadsheet that scorecard that you're doing.
On the scorecard.
Yeah,
Uh, Obviously it's the weekly target. Um, it's jobs completed, revenue, um, cash collected, Hang on, let me have a look. I've got it already. So revenue, jobs invoiced, cash collected. Only three. That's it.
Okay. And jobs invoiced in dollars or number of.
Jobs invoiced,
That must be the number.
number of, like how many?
Yeah, because the revenue target would be the dollars.
Yeah.
Cool. And cash is a dollar amount.
And then cash is a dollar amount. So revenue is a dollar amount, cash is a dollar amount, cash collected, sorry, and then jobs invoiced as in uh, of job count.
Yeah, great. So if you're looking at this month potentially being 175,000,
Mm.
this line along here is going to be important about the revenue collected.
Yeah.
And then the cash collected, super important too. Hopefully that's going to have a lag from last month.
Mm.
So you might see at the start of the month that's higher and it dips off towards the end of the month. Depending on the payment terms. Most of your customers are 30 days in a month?
Most are. We have one that is 30-day from end. Uh, and they're the only one. Other than that, everyone else is 30-day from invoice.
From invoice. Okay. Oh, so that might be pretty smoother then. If it's from invoice date
Yeah,
and
so
you're invoicing
sometimes,
regularly.
yeah, we've had some bad months where we're doing the work, but we're just unable to get these sometimes jobs completed and invoiced until after week two, which just makes us end of month really heavy for money coming in.
Yeah.
So getting a good spread with invoicing every week is great for cash flow. Sometimes it just doesn't work out like that.
Yeah.
We intend on doing it, but it just sometimes unforeseen just happen. Like you have these good jobs stacked up, and then some unforeseen things when we start, and then the jobs go on hold. So now you're starting more fresh ones that you're not able to invoice until week three. We still tend to sort of hit our end of month target, but all our big invoicing happens in the week 3, 4, which just makes our cash come in late the following month.
Yeah. Yep.
It's starting to improve. I think this month would be pretty good. There was few jobs that we started at the end of the month that we're going to be invoicing, I think this week or next week, which is good.
Yeah. Okay. Okay. So just to summarize here, and we'll get into your specific stuff here. This financial system is the 3 steps that the collect, process, and report.
Mm.
And we've got in the process there's the admin side, and there's also a bookkeeping accounting side to that. With the report, there's the ATO stuff, which is important but not that useful, and then there's the management reports that you want, which can include non-financial KPIs. And for the dashboard, the KISS principle: keep it simple and clean, and get someone else to prepare those numbers for you, so you're not running around pulling the numbers in, but you're looking at them at least weekly or daily. And the right numbers. And we'll have a look at the profit planner now, which has got some of these elements in it. That's a useful forecasting tool to help you look at these numbers. But there's going to be generally a revenue target, cash target, and an operational target. And for you, you've got jobs are running, you've got the revenue, and you've got your cash collected. It might be different if you're a business that is more likely to be invoicing every month. You're not going to have a lot of movement during the month on your revenue if you're running progress claims for large projects. And most businesses got a bit of a mixture of high volume, lower ticketed works moving through it. You can invoice weekly and as you go, or possibly larger projects that you're invoicing a progress claim at the end of the month or closing out every month.
Mm.
it's probably trickier and but still super important for a business that's got the monthly cycle that they've got weekly KPIs they're looking at.
Mm.
So the weekly on the operation, the weekly KPI might be, progress to those milestones in the jobs. That could be, meters in the ground, number of things installed, different operational, how far towards getting that progress claim that we want to do, which is 50 grand. Are
Mm.
we going to be able to achieve that? Did we get the switchboard on site or whatever those
Yeah. Yeah.
those things are? So the sales forecast is the profit planner. This is, excuse me, the way this is broken down. Uh, it's a looking forward as far as we can. And some businesses can look forward 12 months, 18 months. Some businesses can look forward 12 days, some 12 hours. But there'll be a timing that makes sense. And the further we can plan, the better. And it's broken into three, or there's four. In this one, there's four areas. So there's recurring income that might be regular contracts that bring in a certain amount every month.
Mm.
Not guaranteed, but if we keep doing the same sort of work for client A, we're probably going to get this sort of revenue each month. Client B might be this much each month. And that might fit for your business where you've got a number of builders that you're working for regularly, whilst you've got no idea of how many work orders or what the makeup that you're going to receive. You could look
Mm.
back and go, I think we're going to end up with about 50 grand here, 10 grand here, five grand.
Yeah.
So it'll give us some sort of forecast, and then you can also adjust for the seasonality. You go, January's going to be lower, or February, or December, or April's generally a bit harder to deliver for the public holidays, things like that.
Mm.
Down here would be where you had a more contract base. So if you had the confirmed contracts would be anything with a purchase order or a contract that's signed. You can put that in here, and this is the total revenue, but you spread out the progress claims over the month that they're going to be invoiced, not the cash collected, but when they're going to be invoiced. And the probable is where you start for a business that's doing a lot of estimating, tendering, quoting, is just getting an idea of, I think we're going to get this in. And the probable here is a 70% chance of winning the work. So it's likely we're down to the last, we're discussing pricing. The person we're priced it against has won the job. We're talking details. I think we're going to win it, but we haven't got the purchase order yet.
Mm.
Possible is where there's about 50%. Not everything's in here. It's just, we're still in with it, in with a chance, but we're not
Mm.
any more certain. We're more certain than 50, but not 70%.
Mm.
That gives us a spread then of what's confirmed and what's possible. And you see in this scenario, it's just dummy data, of course, but confirmed 100 grand, possible 646. Quite a big difference.
Mm.
Then we put in here the break even. We know how important it is to understand the break even. You've got that number clear for your business now. It's dependent on your overheads and your gross profit, but you can update it each month, and you can update it forward looking. So if you're thinking, I'm going to put on another employee or another vehicle or some other cost, you could put that into there and see what that does to your break even point.
Mm.
And if you're expecting my GP is going to go down to 28 rather than 38, you can see what that does to the break even as well. The good thing about having a forecast next to the break even is when you look forward, you can see, ooh, confirmed 100 grand, break even 330, we've got a problem.
Mm.
Probables, we're okay. I better make sure I close some of these jobs out. What can I work on and make sure it's locked in?
Mm.
Then the next part down here is that revenue per site worker. Just to give a forward look at, if I win everything, I'm going to need 26 people. Unlikely, probably not but this scenario might be more realistic. If I win everything, I'll need 14. If I've just got what's confirmed, I only need 6. And you can always push out, 6 or 10 or whatever it is by a couple of people by just running 10-hour days or weekends or a bit of overtime.
Mm.
And you want to be, when you're thinking about your field labor, this forecast is useful to look forward and go, well, can I afford to put on another technician or another tradesman? Do I need that? And then you can be thinking about your mix of direct employees and variable costs, whether they're subbies or a labour hire or
Yeah, well, we can look at that and think that through this period we can get through that with a couple of subbies on.
Yes, yeah, exactly.
Without committing to putting an employee on. It gives you that you're able to forecast that.
Yeah, for sure. And then if you look further ahead up here, these numbers weren't right, but well, actually that business level is going to be normal now, from what from what clients are telling me.
Yeah, it's ongoing. We had a subby to get that through to deliver on our clients, but it seems to be coming. Well, it seems like we're in good shape to find another employee.
Yeah.
You test the waters before you commit and sign someone up.
Yes. Yeah, exactly. Yeah. So that is to wrap up. You've got the three key things we've got to cover off, which is building the financial system to get the reporting out, the data. Then you create your dashboard, and then with your dashboard, you're just always checking in you got the right numbers, and they're not always financial. The one example, I was working with a client who was doing a lot of commercial fit out, and they were doing manufacturing, and the skip bins or the waste bins were outside the owner's office. He knew that they would get emptied twice a day when the factory was running smoothly and production was up.
Yeah.
So if they didn't get emptied, he'd go,
what's going on?
And he's down in the workshop. What's happened? Oh, the CNC machine's broken or whatever, or we've run out of materials or whatever. So that's a non-financial indicator, but so useful for.
But it's an indicator, right?
Yeah. So there's
well,
things.
In a roundabout way, it is a financial indicator.
Well, it'll lead to financial results, but yeah, the number of times the waste had to get moved, or the trucks had to come to the bins was a lead indicator for him of what production's happening.
Yeah.
Okay, so does all make sense, Justin? We've touched on
it does.
Bit of that.
I'll obviously repetition before it starts to become second nature. I'll be trying to remember a lot of that, but it's just it makes sense. When you're explaining it, it makes sense. If I was to then go and explain it to someone else now, I'd struggle. But that's why I'm glad we've got this video. I can keep looking at it until it sinks in. Yeah, for sure. Well, let's jump in now, and we'll do that live report and use that GPT for your business. Yeah, okay.
We'll see what comes out of that.
Yeah, cool.
So just bear with me a tick.